Welcome back. I'm Pratap here. Today is 18th March 2025. In this video, let us evaluate the performance of high liquidity zones generated in our previous end of the day report. Even before that, all of you please note we are providing complete free training on supply demand zone price action, and it is a highly expensive training course, but we are providing complete free training, and all the training lessons are already available at our NeoStock YouTube channel. So at our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community, so click on that Community tab. Then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. I kept all the training lessons in this playlist. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one, but according to my training instructions provided at our Telegram channel. And I also provided the link to our Telegram channel in this video description. So join at our Telegram channel. So at the Telegram channel, top of the window, you can find the pinned messages. And one of the pinned messages is about all the training instructions. So please go through all those training instructions and learn this course according to those training instructions. Then only you will become a very good independent trader in the coming months. Please make use of this opportunity. Now let's get into the evaluation of the high liquidity zones identified in the previous report. And the previous report we identified 5 high liquidity zones from daily and 75 minutes time frame, and we got couple of trades from HUDCO, and HUDCO is a 75 minutes high liquidity demand zone identified by our software. So this is a rally, 3 base candles and a rally candle. This is how our software identified this zone. And this 75 minute zone we should fine tune with 15 minutes time frame. So go to the 15 minutes time frame. Here in the 15 minutes time frame, you have a drop candle, you have 1, 2, 3, 4 base candles, and then you have a high explosive leg out candle. This is how we identified a fine tuned 15 minute zone. Inside the 15 minute zone, again you should identify fine tuned 5 minutes time frame. Go to the 5 minutes time frame. Here in the 5 minutes time frame, you have 2 order flows. First order flow is drop, 2 base candles and a rally candle. Second order flow is rally, base, rally. You have 2 order flows. Okay, second one, we don't have any doubt, very clear. First one, some of you may feel this could be a medium size leg candle. Maybe some of you may feel like that. Or some of you or majority of us may feel it is a narrow range candle. But anyway, to clarify our doubt, what we can do, sometimes instead of using 5 minutes, when you have some confusion, or when clarity is missing with 5 minutes time frame, you can look into 3 minutes time frame. You already learned 3 minutes could be a supplement to the 5 minutes time frame. So go to the 3 minutes, then you get perfection here. See here, we have a rally, 2 base candles and a rally candle with hidden body, and then follow through candle. So this way also you can confirm here we have a very strong institutional order flow. And also here also see again 3 minutes also, you have a rally, 3 base candles and a rally candle. Anyway, 5 minutes itself we have the clarity in this zone. This is a drop base rally. So this is the way we identify 2 fine-tuned zones. And look into the first one. Today we got the trade. When we got the trade? At 10:55. And till 11 o'clock, the prices are within the zone only. But only thing, did you notice prices came almost close to the digital line? Of course, below we have a stop buffer. So stop buffer is also added here. So this is our entry, this is our stop buffer. Definitely you all would have got this trade. There is no question of missing this trade. And achieved 1:3 RR. It is not able to achieve the 15 minutes target here. We have a 15 minutes target, but this 15 minute zone is almost the same as 75 minute zone. Drop base, drop follow through candles, go to 75 minutes time frame. The same zone is also a 75 minutes. I think these are the old zones. Let me delete. Okay, see here you have a rally base drop. That way you can also keep your target up to here, because 75 minutes order flow is even much stronger. See, already prices reached up to here just before it again pushed. Maybe strong order flow is there. And the 5 minutes time frame, when you are looking into the 5 minutes time frame, the first trade is not able to, even second trade is also not able to reach up to this 15 minutes target. Today both failed to reach, but the thing is they achieved 1:3 RR. That is the good thing. 1:3 RR, achieving 1:3 RR is a successful trade for us. In case if they fail to reach 15 minutes target. That way our first fine-tuned 5 minute zone is a successful because it is achieved. Maybe those who did not book the profit, probably using trailing stop 1 minute, somewhere you might have booked your profits, but you would have got less profit. Those who booked a profit at 1:3 RR, you would have got the maximum profit in this trade because it failed to reach 15 minutes target. See, here also some people may say drop base, drop, but I am not convinced because this is looking like a medium size candle. This drop candle. Or maybe some of you might have booked the profit like that by considering this is the 15 minutes. That possibility is also there. But remember, it is a medium size candle, not leg out. Not like this. This is a 15 minutes. See here, drop and follow through candles. Sorry, up to here. Because earlier we have drawn up to 75 minutes zone. This is the 15 minutes target. See, now you see this is a small candle. This is the candle. That means small means medium size. When you are seeing in a bigger view, see this is a drop candle, large candle. See, this is a small candle comparing with the other previous candles. Okay, anyway, achieved 1:3 RR. And after that, prices again. Generally what we do, we have tendency to take second trade on the same zone during the intraday because many times they work. But see here prices reached almost close to the digital line. Planning second trade in this zone is risky because it may not be a high liquidity zone. We don't know. But manually when you are looking into this zone, it is not yet tested multiple times. So definitely prices came. Intraday, even normal zone also many times gave you second test, successful test, many times. But price action clues help you should take. Here you see price reached near the digital line of this zone. That's why there are higher chances this zone will be violated. That is what happened today. And finally it gave you again a trade, second trade at a 12:45 candle. After that, at a 2:45 candle, 5 minutes candle, it achieved 1:3 RR. So definitely here you have to book the profit because we are almost nearing to the closing hour of the market. Expecting reaching 1:3 RR is, reaching 15 minutes target is not practical because the distance is a lot is there, a lot more. Whatever the distance it traveled for 2 hours, same distance it should complete in 45 minutes. Is it practical? It's not practical in the closing hour. And moreover, it is at 2:45. Many people will be booking the profits also. Selling pressure also it will get. That is what happened here. See, after 2:45 candle, it got the selling because people might be booking the profits nearing to the closing of the market. So that's why booking the profit at 1:3 RR is a very wise decision for the second trade. First trade you may expect, because a lot of time is there, you may expect price may reach up to 15 minutes target. It didn't happen. Maybe some of you who did not book the profit at 1:3 RR, maybe using trailing stop loss, somewhere here you might have booked. If you go to 1 minute trailing stop for the second trade, after reaching one, generally we use a trailing stop once it achieved 1:3 RR. So it achieved 1:3 RR. See, you have a rally, base rally with pro gap, and this one is violated here in this candle. So probably somewhere here you might have booked your profit. That way you might have got a little less profit compared to booking the profit at 1:3 RR level. Okay, but anyway, the distance is very small. The profit, even though profit is less, the margin difference is very narrow difference. Okay, how much profit both these trades we got? What is the RR they achieved? Both the trades we achieved 1:3 RR. That is what we discussed. Okay, my question is, what is the ROAs they achieved? What is the profit? So let us look into the Excel sheet. Here, first trade we got 3,443 rupees profit, which is a 2.4% ROI as per one futures margin cost. And the second one we got is 5,990 rupees, close to 6,000 rupees. And this one we got 4.1% ROI as per one futures margin cost. So these are the only two successful trades we got today, and remaining we did not get any trades. But let us see how we analyzed the remaining stocks. First one is a Crompton. This is a daily high liquidity supply zone. Our software identified this as a drop candle. This is the candle. Drop. These two, this is a medium size, a drop candle. Remaining all are medium size candle. 1, 2, 3. Maybe this is a small candle. And then again a drop candle. Drop base drop. This is how our software identified. And this one we fine-tuned with 75 minutes. So 75 minutes, we have an excellent 75-minute zone. Rally, 3 base candles and a drop candle. Within the 75, again we have an excellent 15-minute zone. So here we have a rally, base, drop, the 15-minute zone. It is a fine-tuned inside 75. This 75 is fine-tuned inside a daily zone. Now inside 15 minutes, we should look for a fine-tuned 5-minute zone. Let's go to the 5 minutes time frame. Let us check inside the 15 minutes fine-tuned zone. Now you can find an excellent drop, 2 base candles and a drop candle. So this is the area you should plan your trade. But today prices did not enter into that zone. So we didn't get the trade. And next one is a granule. This is the one now. Daily high liquidity supply zone. This is the daily zone. How our software identified drop, 3 base candles, drop with hidden body or pro gap. This is the area we have drawn as 75 minutes zone. You can consider drop 1, 2, 3, 4 base candles, a drop candle. That way you can consider, or you convince this is not a small candle. If you convince this is a medium size candle, then also you can say rally, 2 base candles, drop. Anyway, the structure does not impact. I thought these two are teeny candles. That's why drop Two tiny candles. Tiny candles, we don't look into the body. Even 100% body also we consider base. And these two medium size candles and drop candle. That way I have drawn. But look into the 15 minutes, there is no proper 15-minute structure here. Look into this. Maybe this is a drop candle. And this is 1, 2, 3 base candles. Again, this is a ERC, failed ERC. But failed ERC, you can't consider this as a leg out because the body is almost within the zone. At least it should come, a considerable amount should come out of the zone. Then you would have considered, maybe up to here if the body would have come out, I would have considered this failed ERC as a leg out. But in the dynamic view, see this failed ERC, almost the body is going into the zone. So such kind of leg out candles you should not. Imbalance should come out of the zone. What is imbalance? Earlier prices are moving in a narrow range, in a balanced way. And because of due to heavy order flow, the imbalance should come out of the zone. Actually, that is what happened. At some point, it is a big drop candle. But again, sharply prices moved up immediately. So that is the reason why if the leg out body is not sufficient, you can't plan the trade. And if the leg out body is not sufficient, means it's not sufficiently coming out of the zone. Sufficiently, the body is not coming out of the zone. Such kind of situation we should not consider. So that is the reason why I did not consider this as a drop base drop. Okay, fine. After that, you see this is a ERC, failed ERC candle. You can use it as a leg in. This is again a drop with hidden body. You can consider it as a leg out. This is a leg in. This is a leg out. In between, no base candles. So that is the reason why there are higher chances this zone will be violated. Or there is other option, when next time prices enter into the zone, institution should create a new 15-minute zone and then push the prices down. Then in that 15, if there is a fine-tuned 5-minute zone, and after that again and then one more next time when prices are entering, at the time you can plan the trade. Except that situation, remaining situations, there are higher chances this zone will be violated. So this is about granules. Next one is a Havells. Havells is also a 75-minute, daily high liquidity supply zone. Havells already we fine-tuned previously. This is not because the moment I opened the chart, it is there already in my chart. Actually, we have two zones. Our software earlier identified this zone. This is the one. Even today we have a rally, 6 base candles, 1, 2, 3, 4, 5, 6 base candles. And from here with the hidden body, there is a big drop candle. This is a daily zone. And we have already fine-tuned and kept this zone. After that, again, our software identified a 75 minutes high liquidity zone. This is the 75 minutes high liquidity zone. So our software previously identified this zone. How the 75 minute zone is identified previously? As a rally candle, 3 base candles and a drop candle. This is how our software identified this zone. With hidden body, rally, 3 base candles and drop. So at the time we have fine-tuned this zone. This 75, already we fine-tuned. We got a rally base drop. Prices came near to the zone and came out till the fine-tuned. Sorry, let me go to the 5 minutes also. In the 5 minutes, here we have a fine-tuned 5-minute zone. We have a drop, 3 base candles, actually medium-sized candle and drop candle. At the time I explained, instead of drawing the zone like this, I have drawn like this because the imbalance started from here. So that if you draw, this is the area, you have a strong institutional order flow and prices also near to this zone and came out. Maybe next time you can plan the trade. That is what we discussed. So this is already tested. When? On 13th March. 13th March, Havells, do we have any trade in Havells? Let us check. No. That one we already, maybe before 13th March itself, we identified the zone and we did not get the trade on that day. When we would have got this approximately, let me check. Probably our software would have identified either on this date. So the next trading session prices did not get a trade. Please check. Probably we might have analyzed this stock on 11th March. But it gave a trade on 13th March. Software would have identified at 10th March. We analyzed this zone on 11th March. On 13th March, it reached and sharply prices came down. That means the analysis we did perfectly worked, but not immediate day, next day. Why we don't take trades in the next day? Because they work, but you can't expect 80% success rate. Maybe 70% or 65%. That kind of success rate you may get on these zones. That's why generally we don't carry the forward these stocks to the one more day unless our software identifies. We always look today's findings only tomorrow live session only we will see. Day after tomorrow we don't look into the HLQ zones. See, remaining concepts you can apply. Bullish and bearish trade setups any days you can apply as long as the setups are valid. But HLQ zones are valid only the next trading session only. If we identify today, tomorrow only they are valid. Day after tomorrow also you can use, but don't expect 80% success rate. The success rate will gradually slow down. But sometimes these zones work. Give a profit here, excellent profit, the one we fine-tuned. See, the rule is very simple. When you fine-tune the zones, many times the fine-tuned areas gives you good results, good profits, especially in high liquidity zones. Okay, anyway, it is already tested. Today, the moment I opened yesterday when I was analyzing, I thought this will be violated because it is a tested zone. That is what happened. But we have one more. This is previously we analyzed here. We have a 75-minute zone, rally, base, drop. This one is fine-tuned with 15 minutes time frame, rally, base, drop. 15-minute zone again fine-tuned with 5 minutes time frame. Here, sorry. Let me go to 15 minutes. Yeah, here in 15 minutes, we identified this entire area again and a drop candle here. This is a medium size part of the base. Or maybe you can say rally, 2 base candles, a drop. This is the imbalance started and follow through. That way also you can identify. Actually, that is what I have drawn here. Rally, 2 base candles. Here price is in a balance, in a balanced way in these 2 candles. Imbalance started and a follow through candle. That way I considered at the time when I was analyzing this chart. If you are not considered, the same thing, 75 minutes also you can consider as 15 minutes and drop candle. At the time, this is a medium size candle, part of the base. It's up to you. Maybe the moment I hide this candle, maybe it is looking like a big candle. That way I might have considered. Yeah, perfect. So rally, 2 base candles, drop. That way I might have considered. But anyway, our focus should be on 5 minutes time frame. So inside this, you have a fine-tuned 5-minute zone, not this one. This is the one. So here you have a drop, 2 base candles and a drop candle. Drop base. So this is the area you want to plan our trade. This is what we already discussed previously. The only thing you should observe, the one we analyzed earlier got the trade on 13th March. and gave a good profit on the day, whoever might have considered, but because some of us may consider even up to 60% risk level. Those people could have taken a trade here. If there are no other trades, such kind of old trades, might be we can take a little extra risk and we can plan our trades. But anyway, I'm not capturing those old statistics always, because our focus should be 80% level, are we achieving or not. That is only we are focusing on every month. End of the month, we are doing the calculations also, the monthly statistics. So anyway, Havells today we didn't get a trade. This is the reason. This is the only one who is fine-tuned 5-minute zone is violated. We know that because it is already a tested fine-tuned 5-minute zone. That is what happened. That is what you learned in lesson 16. When a zone can be violated. That concept only we applied here. We know that this zone will be violated, this 5-minute zone. That is what happened today. But the other one we didn't get trade opportunity. And next one is Hindustan Copper. This is also a 75-minute zone, but it is a demand zone. Rally, 2 base candles and rally. But I didn't fine tune. Did you notice? Why? Good. Look into the 15 minutes, you will understand. In the 15 minutes, we have a drop base rally is there. If you draw this drop base rally, this is the 15 minutes demand zone, and this 15 minutes demand zone is violated, maybe pierced. This is the area. But next time again from the pierced zone it came. Maybe pierced zone strategies might have been applied here. Go to 5 minutes, maybe some order flow might be there. No, 5 minutes order flows are not clear. Maybe 15 minutes, 3 minutes order flows we can check if there is any zone is available here. Three minutes is also not clear. Maybe drop base rally is created, but that is pierced here. Maybe institutions created a new drop base rally and pushed. Let us check in the 5 minutes. Yes, they created a new drop base rally and pushed the market. That's why it moved. So in the pierced zones, this is the time market is pierced. Institutions did not create a new order flow here. But next time when prices entered, at the time institutions created a new order flow. That way we got a fine-tuned 5-minute zone here within the pierced zone. This is a pierced zone strategy. I'm just telling you how powerful these strategies. Sorry. Okay, here. You have a 5-minute zone, drop, base, rally, and this is the pierced zone strategy related order flow. Why? Because this zone is already pierced, so we won't consider in general. But the moment you apply a pierced zone strategy, it comes under the category newly created order flows inside the pierced zone. Many times these order flows are very strong. And when prices entered into this zone again, and prices came into the zone on 17th Monday, yesterday, 17th March. From this area, market moved. Today also came very close to this zone, but not good enough. Maybe if anybody added some entry buffer, maybe your trade might have been executed, but let us check. This should not be 1 minute candle, 9:15 1 minute candle. No, it's not today. This happened on Monday itself. Today candle is here. So that means today there is no scope of getting a trade here. The 5 minutes pierced zone the trade opportunity, yesterday clearly we would have got 1255. Okay, those who are using intraday, they might have booked. But those who wants to carry these positions, because many times pierced zone order flows are stronger, sometimes they may work even for after few days they will work. Short term also they give, sometimes medium term also they may work. We have seen. If those who took the position and hold it, see today how much profit you would have been got at 213.50 paisa, around maybe 43 paisa, 213.43 paisa, you would have got the trade. Let me say 213.50 paisa for easy calculations. See today already 222.12 paisa. Till today, maybe it may further move up. But I am just trying to tell you how powerful these pierced zone strategies that you learned in lesson 28. So 222.50 paisa, let me say 222.50 paisa minus here approximately 213.50 paisa. Round values I am giving for easy calculations. We got 9 rupees profit. When you got the trade? Monday, 17th March. Today, 18th March. Let us assume somewhere here, 222.50 paisa, we booked the profit. Let us assume. You would have got already 9 rupees. How much profit you would have got in Hindustan Copper? I am just roughly calculating to make you understand how powerful pierced zones are. I'll show you another example. The pierced zone strategies. That is NIFTY. After that we will look into NIFTY. $2650. That is 23,850 rupees profit you got in 2 days. Yesterday you would have got a trade, and today, in case if you book, if you are still holding, maybe tomorrow it may move. Who knows? But as on today, it got 23,850 on your investment. Okay, what could be here you would have purchased? And today at the time of closing, the value is 2,56,000 margin. Maybe at the time when you took the trade, the cost could be maybe 54,000. So into 100 divided by 2,54,000. You would have got 9.4% ROI you would have got. 9.389, that means 9.4% ROI in 2 days on your investment. Just by applying pierced zone strategies. See what happened to NIFTY. NIFTY is another classical example. See, this is a dark green color area. This is a 5 minutes or 3 minutes order flow inside pierced zone. After that only, after entering into the pierced zone area only, the order flow is pushing the NIFTY. And actually yesterday I would have discussed yesterday we discussed about NIFTY, daily HLQ zone. Go to the daily time frame. I didn't tell this point yesterday. Maybe somehow I focused only fine tuning the zone. But strictly speaking, see from where this daily zone is created, this drop, base and rally. From where it picked up the orders from this fine-tuned zone, which is inside the pierced zone, inside weekly pierced zone. In that a 75 minutes zone is created. That 75 is having a fine-tuned 5-minute zone. From there it picked up the orders. Now you can understand how powerful this pierced zone order flow inside. See how beautifully institutions planned creation of their order flows. Because there is no concept pierced zones, people, they don't focus on this area because the earlier zones are violated according to supply-demand zone theory concepts. Because we introduced a new concept pierced zone, now because you also completed pierced zone strategies in lesson 28, now you know the real power of these pierced zone strategies. How many points the Nifty has given so far? Picked up the orders from the piercer zone. Somewhere it is 21,980 or 970 or 980. Say, let us say 21,980. Or you can say rough value 22,000 also you can consider. And today Nifty is 22,834. Nearly 850 points move you have seen, or you can say 800 points move you have seen so far. 800 points move. After Nifty reached this piercer zone area, and their newly created order flows are there. The newly created 75 minutes order flow, we have a fine-tuned 5-minute zone. And from there onwards, Nifty is started moving and it gave you 800 points. Moreover, overall market is down in all these days. But piercer zone only helped in pushing the market up. This is the powerful concept, piercer zones. But you should learn each and every point in lesson 28. You should not skip certain points in piercer zone strategies. When the moment you skipped some of the, because I know some of you are learning every point you are learning, but some of you are learning in fast forward, some of you are learning in skipping some points and randomly you are learning. Because my this studio, YouTube studio will tell how people are attending the concepts, it will tell. That way I am assuming. Some of you are learning completely, some of you are learning in fast forward, some of you are skipping the points and just you are learning, randomly you are listening. Those who are learning every point by point, probably they get the maximum benefit from this lesson. But those who skipped certain points and completed our 2-hour training in just half an hour or 20 minutes, you won't get any benefit. It's a waste of your time. Instead of listening in 2 hours video in 20 minutes, better you would not have listened that video. Because it is a new strategy. These strategies are not there in the market. But you are seeing these strategies, how powerful they are working. Can't you believe these strategies by looking into this Nifty example? And also by looking into this Hindustan copper example? How it worked? From the piercer zone, only newly created order flows. Inside piercer zone, newly created order flows. I am not saying 100% these concepts work. No concept works 100%. But majority of the times, they have huge success rate. Not only the success rate, huge profit margins also they are giving. That is even more important. They are giving good short-term profits or medium-term profits they are giving. See how many candles after that Nifty reached this piercer zone? It came on 4th March and today 18th March. Till Nifty is further moving. Generally how you seen? You have seen Nifty is like going down, some moving something and profit booking, again coming down, again moving something, profit booking, again coming down. This time you see drop, base, drop. This zone is violated. Nifty trend is changed to the sideways. Now you have another daily supply zone. Here we have a daily supply zone, maybe rally, base, drop with hidden body. Now Nifty is closed inside this daily supply zone. If this is also violated, and here high liquidity zone probably acting as a lower time frame horizon to this zone, definitely this is the area strong order flow will be there. If this is also violated, now Nifty trend will be changed to uptrend on daily time frame. In case if Nifty trend is changed to daily, already changed to sideways, who is the reason? Piercer zone. Even if it is changed, say let us assume, I cannot predict, just I am assuming, even if it is violated, then who will be the reason for all these things? The piercer zone order flows. The newly created order flows inside the piercer zone. So that's why everybody learn lesson 28 concepts properly, especially those topics that are giving you good profits. You should learn those concepts properly. High liquidity zones, lesson 21. And a lower time frame horizon to the higher time frame zone, lesson 22. Pearson zone strategies, lesson 28. They are all newly developed concepts. They are not available in the market. Nobody knows those concepts. You are the first people learning those concepts. Of course, not only you, some trainers also learning from our, because we have all the advanced strategies. Some supply demand zone trainers also, they are attending our courses. I know a couple of trainers who are attending our courses. They already interacted with me. They are also using our premium service. And then they will be started teaching for their students. That way slowly people will come to know about these concepts in the coming days. But before that, you are the first timers learning these concepts. Before the other people understand all these concepts, you will get perfection. You get more profits. And moreover, our software is also identifying PR, because now I am not filtering the PR zones until the daily time frame. Stocks near demand and supply zones, price closed inside demand and supply zones in daily time frame, weekly time frame, monthly time frame. You can look into the PR zones. By looking into the pierced column, if the count is more than 0, you can identify the zone is a pierced zone. Now you analyze any newly created order flows and any fine-tuned zones are available. Next time when prices are entering, you can plan your trades. Okay, hope you understood the beauty of pierced zones in these examples. Okay, this is about our today's HLQ zone analysis video. Let's all meet again in our next video. Thank you.